Most Australians are making at least one costly mistake on their tax return every year. Some people miss deductions they're legally entitled to claim. Others accidentally overclaim and end up getting audited. And many don't realize there are simple tax strategies that could save them hundreds or even thousands of dollars. Before you lodge your 2026 tax return, there are a few important things you need to know. And by the end of this video, you'll know exactly what to check before tax time so you can keep more of your hard-earned money.
Tax time affects almost every working Australian. Whether you're an employee, tradie, teacher, healthcare worker, or someone earning extra income on the side, understanding a few key tax rules can make a huge difference to your refund. The problem is that most people only think about tax once a year. They rush through their return, tick a few boxes, and hope for the best. But the Australian Taxation Office has become increasingly sophisticated in tracking income, matching records, and identifying unusual claims. That means it's more important than ever to understand what you can claim, what you can't claim, and how to legally reduce your tax bill. In this video, I'll cover 5 tax tips that every Aussie should know before lodging their 2026 tax return.
Tax tip number 1. One of the biggest things Australians should be aware of heading into the 2026 tax return is the impact of the Stage 3 tax cuts. So what exactly are the Stage 3 tax cuts? They are changes to Australia's personal income tax brackets and tax rates that were introduced to reduce the amount of tax many Australians pay. The reforms lowered tax rates for a large number of workers and adjusted the income thresholds at which different tax rates apply. These changes have already affected how much tax is being withheld from many workers throughout the year. For some Australians, this means they've been taking home more money in each pay packet. But it also means tax refunds may look different compared to previous years. A lot of people judge their tax situation based on the size of their refund. That's a mistake. A larger refund doesn't necessarily mean you've paid less tax. It often just means you've paid too much tax throughout the year and are getting some of it back. The better question is how much tax you've paid overall. Before lodging your return, take a moment to understand how the tax cuts have affected your income, and don't be surprised if your refund is smaller than previous years. What matters is your overall tax position, not the size of the refund.
Tax tip number 2. One of the easiest ways to maximize your tax return is to keep good records throughout the financial year. Every year, Australians miss out on legitimate deductions simply because they can't prove they paid for them. The ATO expects you to have evidence for any deduction you claim. That means receipts, invoices, bank statements, or digital records. Common expenses people forget about include professional memberships, union fees, work-related training, home office expenses, tools and equipment, work-related travel. Trying to remember everything at tax time is difficult. Instead, get into the habit of saving receipts as you go. Many banking apps and expense tracking apps make this incredibly easy. Good record keeping doesn't just help you claim more deductions, it also gives you peace of mind if the ATO ever asks questions about your return.
Tax tip number 3. Many Australians with a student loan don't pay enough attention to their help debt. If your income has increased during the year, you may find yourself paying a higher compulsory repayment than expected. On the other hand, some Australians finish paying off their help debt but continue having repayments withheld from their salary because they never updated their employer. In that situation, you may receive some of that money back when lodging your tax return. Before tax time, it's worth checking your current help balance, whether your employer is withholding correctly, whether your income has moved you into a higher repayment bracket. A quick review now could prevent an unpleasant surprise later.
Tax tip number 4. One of the most effective legal tax strategies available to many Australians is making a personal concessional contribution to superannuation. For eligible Australians, contributing additional money into super before June 30 may reduce taxable income. Here's a simple example. Let's say you're earning $100,000 per year and decide to make a $5,000 concessional contribution to your super. Instead of paying your marginal tax rate on that $5,000, the contribution is generally taxed at 15% inside super. For someone on a marginal tax rate of 30% plus Medicare levy, that could result in a tax saving of around $800 to $1,000, depending on their circumstances. If you contributed $10,000, the potential tax savings could be even greater. Not only could you reduce your tax bill this financial year, but you're also boosting your retirement savings at the same time. Of course, everyone's situation is different. You should always check contribution caps and eligibility rules before making a contribution. But for many Australians, super contributions remain one of the most tax-effective strategies available.
Tax tip number 5. Many Australians try to lodge their tax return as soon as possible. While it's tempting to get your refund quickly, lodging too early can sometimes create problems. Income statements may not yet be finalized. Investment income may still be reported. Private health insurance information may not have been uploaded. Bank interest records may still be pending. Waiting until all your information is available can reduce mistakes and help ensure your return is accurate the first time. A little patience can save a lot of headaches. Those are 5 tax tips every Aussie should know before lodging their 2026 tax return. Remember, understanding the new tax cuts, keeping good records, reviewing your help debt, considering your super contributions, and waiting until your tax information is complete could make a significant difference at tax time. If you found this video helpful, make sure you subscribe for more Australian finance, investing, tax, and wealth building content. And if you want to learn how Australians can legally build wealth faster using simple investing strategies, check out the next video on your screen right now.